What is going on, everybody, and welcome to another weekly update. What I'd like to do in these videos is provide you guys some upcoming events, some upcoming earnings to get you prepared for the week ahead. If that sounds like something you're interested in, consider subscribing as I do provide daily and weekly updates to get you prepared for the day and the week ahead in this glorious market. Yes. It's been a very interesting market nonetheless. Let's kind of give a bit of a recap of what's gone on over this past week. Over this past week, we've had some of the biggest earnings, essentially kind of the Super Bowl of earnings this past week. And we've also had monetary policy. So let's unfold first off earnings. Up to this point, we essentially have had almost all industry leaders on deck and essentially reported. Now, the market, in my opinion, is essentially done with earnings. Once all banks, some of the bigger value stocks, and then also some big tech essentially have earnings or report earnings from that point, the market essentially makes up its mind and it goes from that point. Now, expectations have essentially been almost in the dirt. So if they come slightly over expectations, a lot of these stocks have been running. And a lot of them are providing some really mediocre to garbage earnings. And considering that the expectations are so low, it is a big problem. It is showing a lot of signs of weakness. And if you look back over the past couple of quarters, we have gradually seen the impact of these high interest rates and what they're doing to these companies. It seems almost every day now, or the past week, maybe 2 weeks, where you're continuing to see massive, massive layoffs, which is quite interesting on that front, especially considering that. We just had jobs report and jobs are really strong, which is quite incredible. The amount of jobs that are being reported, yet, things are just don't seem that way. And, there's another part I want to add to this as far as the housing and stuff, but I'll get into that after monetary policy here. So earnings have been rough nonetheless. Tesla barely skated by. Apple, worst year it's had since like 2016. Took major hits. Amazon, Google, major hits. The ad space in general is just it's been obliterated for over the past year. People just aren't buying right now, and so it's killing the ad space because people just aren't willing to advertise if nobody's buying anything. So the ad space itself has been hurting pretty hard for quite a while. That has not changed. Um, Tesla, again, one of the powerhouses, show a lot of weakness, but we've ran up 100 points, which is quite incredible. So this leads us into the next segment, which is essentially talking about monetary policy. This past week, we came in at a 25-point basis move. We came in with started off as a very hawkish Powell, which turned into more of a dovish Powell. He tried to portray a potential soft landing again, um, but it's really something that's hard to tell because commodities are starting to rise again, and that could be very concerning. The Fed, obviously, they want us down to 2% as quick as possible. Powell really kind of had a different kind of tone in his voice over this past monetary policy, and how he was essentially talking about how they may have overstepped their bounds, but they're essentially not going to let inflation get away. That's their primary concern. Obviously, we're still sitting at 6.5. Our next core inflation report, which isn't until the 14th. So we got about one more week before that comes out. That is also being changed. So that's something you need to be aware of. Core inflation used to average about 2 years. Now it's going down to 1. Concern there, red flags could be conspiracy theory, maybe not. One thing is for certain is that data is being manipulated to portray that things are okay. In one sense, it's wrong. In another sense, you don't want mass panic. If there's mass panic, you can't control the masses. That's always an issue. So if you, even though you may be saying one thing, people, the average person is going to know that something's up, but it's better to essentially try to still paint this picture, right, as opposed to saying that then later on say, oh yeah, by the way, we were in recession, but now we're actually recovered, is what we're going to get. We're not going to get, oh, we are in a recession. You're going to get, we were, and now everything's fine. So nonetheless, monetary policy looks like we're getting potentially 225 more 25-point basis moves moving forward, which is going to be interesting. There's still a very lagging effect from the couple 75-point basis moves that we've had. Again, it was one of the fastest rate increases that we've had in history. We don't know what that's going to look like. Right? Like we're just starting to see the massive layoffs. We're starting to see some of these great companies just getting absolutely battered, even though, expectations, whatever you want to say about the stock market, things are really bad. And then you're constantly seeing people getting laid off. But one thing to also see and one thing to also consider here is Chat GBT has made a name for itself. Obviously, if you don't know about that, right? AI chat, and essentially the fact that it's essentially replacing people's jobs. And a lot more corporations are looking into essentially integrating some kind of AI into their business. And it's important, right? And understand that a lot of these jobs may not be coming back. Does that mean that everybody's not going to just have a job? We'll innovate and we'll find other jobs that are needed and necessary. That's happened all throughout history multiple times. So nothing's really going to change there. It's just going to potentially change the flavor of the way things work. So being said, monetary policy, we'll get 225-point basis moves potentially. Again, the Fed futures have been pretty accurate, and we really haven't diverted from those things. But we haven't had a core inflation. Now, the next monetary policy isn't till March 22nd, but we will have two cores before that time. We'll have some digestion of what is going on with earnings. So that's going to be important. But to kind of wrap up the whole earnings thing, again, there is a lot more earnings, and I will post some earnings on here, as I do have some earnings coming up. But a lot of these don't have as much pivotal impact as the past 3 weeks have had with banks in big tech and big value. A lot of the bigger corporation industry leaders have already reported. So at the point the market can kind of understand where we can go from here. Again, the rest of these other companies, they'll report, but again, they won't have as much impact or pivotal impact on the market. So this week, as far as events this week, all we really have, there's a lot of Fed members and stuff talking this week. Yes, there's some data. Always on Thursday, you're going to want to kind of watch the jobless claims and kind of see where they're at. There's been some ridiculous numbers between non-farms and jobless claims. There's just something's not adding up there, but nonetheless, we will see. But so this week, we really don't have much. We have some Fed members talking. Again, they'll bring volatility intraday, but you do have Powell on Tuesday. He's giving a speech at 12:40. Again, I've always reiterated whenever he's talking, it is very important to watch what's going on. If it's a pre-recorded video, it's going to have absolutely no impact. He's going to kind of just reiterate what he's already has. Again, if there's any kind of setting in which he is in that he is fielding questions, it can have a very dramatic impact. So Tuesday at 12 p.m. Eastern Standard Time, you're going to want to watch out for Powell. Just make sure that and see if he's fielding questions. Again, when that man speaks and you're in the stock markets or any kind of markets, you need to be listening to what he's saying. because his words hold a lot of weight. And this is why he's very specific about what he says because of that fact. So you do have to be mindful of that moving forward. But what else do we have? What other things can we touch on right here, real quick? I do want to touch on the housing stuff again, real quick here. But let's run through this real quick. Upcoming events, again, monetary policy. We don't have that back until March 22nd. Core inflation. We're going to get two core inflations before our next monetary policy, and the closest one being on the 14th. Upcoming earnings. Again, none of these are going to have big impact, but still ones that can move well that by themselves that I want to be watching. So I want to watch Enphase, Chipotle, Disney, and PayPal this week. And PayPal sympathy play for Square. I want to kind of watch Square and see what it does there as well. But we'll see what happens this week. We have knocked back down to a 75 points projection for SPX. Again, I get these numbers all off of options and kind of what the market maker is kind of looking for a potential move for the week. Again, if the more you watch these, it is very good, especially if you're in the market, because you can kind of see how much of an impact something is having that week. Normally, we're getting close to around what the SPX normal move is, which is roughly around that 65, 75, and then understand when this goes above 100, that means you got a very pivotal move that's trying to be priced in. Normally, those are the times you don't want to be playing options, so it's good to kind of know the average of specific ones. That's why I list these here. Tesla, 17. Tesla's obviously been moving a lot, so they're pricing a lot in on Tesla this week again. Apple, pricing in a lot. It's normally around like 4. BA, it's a lot. This is also normally like around 4 or 5. Banks, same. It's about normal for banks for JPM. So that's what we're kind of watching this week. So again, I think we can get some. If there's any kind of big event that does occur, you can definitely capture some good moves, as long as it's not Tesla, because Tesla's trying to price in a little bit too much, because it has made some big moves. It's starting to kind of look like the Tesla of old, with the rips it's had over the past week. So I definitely want to kind of keep that on watch coming into this week. So let's kind of talk about housing a little bit. Something I can keep updated. If this is something you do enjoy me talking about, smash the like button or drop a comment or anything you've heard out there in your area about housing, about the food prices, any kind of inflation, or any insight would be much appreciated, not only to myself, but to all those other people out there that are trying to get a grasp on kind of what's really going out there in the real world, and not off of all this fake data that comes out all the time. But nonetheless, the housing sector in itself, again, there's something that we've talked about is HELOCs on here. And a home equity line of credit, essentially borrowing against your home. There's a lot more people that are starting to take those home equity lines of credits. And the problem is they're not using them to essentially invest in something that's going to make them more money. Essentially, they're trying to use that equity to try to stay above water right now, and it's increasing. Those numbers are rapidly increasing more and more. Which is not a good sign. So instead of people selling, they just take HELOCs out in their home. It helps they don't have to sell, which again could be very concerning in the short future. And something we talk about always on this channel is that things can get really nasty if things get worse. And by God, let's not have inflation start climbing back up, because that's really going to be a cause of concern if that does happen. So with that being said, let's go ahead and jump into some technicals now. Coming into this week, or coming into last week, I was saying we'd probably roughly hit around that 4,200, and we did just that. We have pulled quite a bit of ways away from the daily, monthly, weekly support. As you can see, there's a lot of higher time frame support here. We did kind of get a bounce here. I am looking at some sort of a retracement back down to here, roughly that 4K mark. Will it happen this week? It's really hard to say, especially with Powell kind of providing a lot of hopium. And again, my concern is a lot of the different things I talk about and reiterate in this channel is because of things that people need to be aware of. And even though this picture of things being fine and dandy, there is a lot of problems behind the scenes. And if something breaks and goes into headline news, you're going to trigger algorithms to start selling. This is where flash crashes and stuff happen. I'm not saying a flash crash will happen, but um, I think for us to even start considering making new lows, something we're going to have to get some sort of black swan event, in my opinion. I think, again, the Fed, the media, the administration, they're going to try to paint a picture that everything's okay, to not try to, again, create panic. And once panic is set, then that's when you start getting the selling and crashes. I'm not saying we will have a crash, like I said, but there's some bigger catalysts that are brewing that could potentially cause a crash that is unrelated to just the current general sentiments. A lot of people are thinking that current general sentiment is going to push the market down. I don't think the current statement with the layoffs and all that kind of stuff is going to essentially kind of bring down the market. I think more so it's going to be, well, because of the current sentiments, bankruptcies happen or some massive amount of, maybe it's essentially the implosion of European financial system, right? That could cause a big issue, right? Maybe it's World War III, right? The initial what's going on with China and essentially their balloon, right? That's also another event that's happened. War doesn't typically bring down the market ASAP, but the problem is, you may get the initial shock and scare of that, but ultimately it's really good for a market, even though it's obviously bad. But as far to some extent, right? But you have to understand that if some sort of bigger war kicked off, you're also starting to talk about potentially more supply issues, which could happen again, and restrictions because of being at war. So again, that whole China hot air balloon and over essentially it was over Myrtle Beach. So, and I believe it got shot down from what I have seen. So that's the case. There could be some interesting fallouts from that. Again, there's always new catalysts of brewing, but I think there's just too much tension in the air to not think that things aren't going to go bad. And again, you have the auto industry as well. That's not doing great. The auto industry is much like 2008's housing industry. Essentially, people are trying to get cars off the lot. So essentially, anybody who wants a car, you can pretty much get a car, right? They're just generating loans and letting people take them. So um, who knows what that could lead to, right? And so there's a lot of people that buy these fancy cars, and when the first monthly statement comes in, they're like, "Wow, that's a lot of money." And I think the average loan auto car payment is like $800, which is absurd in my mind. That people are paying that much for automobiles right now. Everything is just so high. There's no sense in understanding when it also comes to housing that pool is drying up, right? Like a lot of the liquidity that used to be there a year ago is gone. People just can't afford it with these high rates. You just eliminated more than probably about half of the liquidity because of these rates being up so high. So it's going to be extremely hard to move supply. Given there's not a lot of supply, so you may not see it. And again, every area is very different. You still have to also understand that what if BlackRock or one of these other big corporations start selling or trying to flood the market and move investments somewhere else? Then the average person who maybe had gotten a HELOC maybe have to actually sell, and they can't sell. And so now they're battling, well, no, I got a payment for, this home equity line of credit. I can't afford it. I lost my job. I need some liquidity, sell it for whatever I can get for it. That's the concern that I talk about on this channel that could potentially happen. So, and that's going to come in waves, right? Just like the layoffs are coming in waves. So we have to be very mindful of that. But again, technical wise, 4,200 was what I was looking at. We'll see what happens when we open. We got rejected really hard off of that. We've pulled, like I said, we've pulled away quite a bit, even from the 20 EMA. So we're looking for at least some sort of retracement down to that. If it holds, it holds. Again, there's no real great news. And one thing we have to also understand is something I've talked about, was we're getting into a normal down cycle. Once these earnings, it's kind of like the Christmas rally cycle. We've had that. Now it's kind of like, okay, it's time to start winding down. And then we get that normal kind of heavy selling around this time. And then we kind of like prep for, a slow gradual increase, and then we get a bigger dive in October, and then we get a pretty strong rally towards the back half of the year. So that's what a normal cycle is. So we're going to see what happens coming into this month, and see what it's got moving forward. So we shall see. But again, ultimately, when we open up, if we can't break 4,200, that's going to be a problem. I said 4,200 would be a pretty big problem to break through. But again, we have a lot of support here. So I wouldn't, again, be surprised if we find ourselves back down to 4,100 at least, if that holds. Again, a lot of these EMAs, especially the daily EMAs, are going to start catching up the longer we float around the 4,100. And again, we could break it. And if we break it, again, we move to the next 100-point range, which is the 4,300. And then we play that range, potentially rip up to the 4,300, then sell back down to 4,200 and just play there. I think we're going to play these 100-point increments essentially until we get a big catalyst, whether that's a pivot from the Fed. And the Fed have talked about they're not decreasing rates until things get extremely bad. And you have to, again, understand that they don't decrease rates until things are like really, really bad. Really bad conditions for them to start decreasing rates. So just imagine if things are reporting that things are so fine and dandy, we're not seeing a rate decrease in a while. And I think that's what kind of provided hope in this push with Powell, is that, well, maybe he actually might change his mind. I think is what market makers were thinking, and why we got such a massive rip up, not only because we had the earnings, but because we were hitting close to expectation on the earnings. Again, earnings were in the trash, but we hit close to expectations. And you have, again, Powell that was kind of like, well, there's a possibility, and that's all you need, and the market's just going to take that and run. So again, that's what we're watching. We have to see what we open on Monday, but we're kind of, again, getting that down cycle. The hype is starting to die down. Earnings are crappy. We still have plenty of earnings to go. But again, just realize it's kind of where we're sitting at. Commodities are starting to come back up. The 14th is going to be important, even though I'm not really heavily weighted on inflation right now. I know it's going to get very sticky at some point. It's not going to be decreasing at it's not really a rapid pace, because it's taken us this long to get from 9.1 to 6.5 for a while. But know that at some point it's not going to move as much. And then at that point, it's going to be an issue. And the Fed are going to have to hold in hopes that it doesn't climb back up. And hopefully there is no war, whatever supply constraints that are unforeseen that causes inflation to go back up. And that's going to be a really big problem, and something we can't tell. So that's why the market has been not so much risk on, because of the fact that there's a lot of things that could potentially happen, and things are very delicate right now. So all you need is one bad thing to happen to the supply chain, and then things are kind of right back where they're at. And so that's one thing we're really trying to avoid. And let's all just talk about hopium. So, so nonetheless, we shall see. But that's what we got for the SPX. The dollar started ripping back up. Looks like it was going to break down and then ripped right back up. A lot of strength in the dollar. This was something I noticed on Friday is really odd, is the dollar was ripping really hard and the market was ripping with it. And we still have the yield curve is historically in a very bad position, but a lot of people are also saying that because of the way the yield curve is, it's currently sitting at, is because of the fact that we could change and pivot I still think it's doubtful that this is going to happen. Again, in my mind, something else has to happen. Right now, what I'm seeing is I'm not seeing a clear sign of a pivot. We don't know. We're still too sensitive to inflation for us to think that there would be a pivot, right? Like things, and the numbers are still reporting high, like everything's good. So we can continue to hammer rates. The market can take it, apparently, even though a lot of people are suffering a lot. Just look at your normal everyday life or things. There's a lot of stress in your everyday life. Then that would tell you that things aren't really in a good state right now. So we shall see, but and go from there. But the dollar again's pushing up, and something to keep an eye on. Bitcoin. Let's take a quick look at Bitcoin. Bitcoin is fluctuating again. I don't really, unless the market can break out, there's really no solid news. And one thing too is you have to understand that I think it's Silvergate's got put under investigation as well because of the FTX situation. And if I am correct, or I'm certain, I believe that they have strong ties to the USDC, which, if possible, if anything does come from that, that could be a big hit to crypto and potentially scare a lot of people if something does come from that. So that's something just to keep in mind if something there does happen. So we'll see. Tesla, big ripper, obviously 100-point rip. People are excited about that. That's why so much is being priced in. You do have the 50 monthly, so you want Tesla opening up and holding above essentially the 184 coming into this week. If you're bullish, I think Tesla can still rip up potentially to 220, a strong possibility. Potentially start playing this range. Again, we are getting out of our earnings cycle, so Tesla will start selling off. Again, I'm not saying this thing is going to correct way back down. It might correct back down to 156 just because it's getting out of earnings mode, or try to recover 50% of this move. Again, if you want the bulls to make a strong case, you want this to be correcting and retesting and not just going parabolic. That is definitely not a good sign. So we'll see how this does open up. But if you're a bull, you want this thing to hold that and continue pushing. Bears, you want this thing broken back down below. You do have now a lot of support now. So if we do break back down, I just see us chopping here. Unless the general market sentiment is really bad, then obviously we're going to potentially see new lows at that point. But as of right now, that's kind of what we're seeing for Tesla. Apple, parabolic. It's had one of the worst earnings since 2016. The thing is going parabolic. This is absurd. So if you think this is okay and that this is going to reverse like this is not normal. And just a 50% correction on this bad boy is going to sink you back down to the 141. I think a strong possibility this thing's going to be back down to 133 here very shortly. Just after a natural pullback. So we'll see what happens there. Again, it may be fueled by something else. Who knows? But we will get out of earnings mode. And once we get out of earnings mode, which may happen this week or maybe even next week, but understand that when we do get out of that, you're going to have about 4 weeks of just nasty chop grinding down. That is normal. Again, now if that's fueled by something else, we will see. But something else to consider here too is BA finally trying to start to break down, which is really interesting. It really needs to hold this 204. If this thing does break down 204, BA is going to be in trouble. Again, something I talked about. You've gone a full quarter here where this thing has just gone parabolic. You can continue to push hopium so far, but at some point you need to be taking profit and just letting this thing ride out, whatever, even if it rips up to 240, right? You want to be risk management saying, well, I'm out. I'm okay if it still rips up to 240. I took my profits and I'm okay. I have to let this thing cool off. You don't want this thing to continue to run parabolic. It just means that crash down is going to be really, really bad. This thing doesn't do some sort of natural pullback and build its case up. So just be mindful of that. So we'll see. Again, we've done 600-point move up, 800-point move down on the general index. Again, So, I always talk about banks, same situation. It's been consolidating, grinding back and forth, essentially between the 142 and the 130. Hasn't really broken out. I think the banks want that inflation report. They want more data. More data is going to help build that case that things are actually pivoting, things are actually turning. If anything does change, it's going to be an issue. It's going to be, again, interesting to see what comes with the new report, especially with only a year's outlooks. You're essentially scrapping a lot of data to try to make things look better. Or potentially worse. I mean, that may be bad. And if they try to do it that way and things are actually worse, then we may not get a report, which is something that's also been discussed. So we'll see. JPM, Goldman Sachs, again, parabolic. This thing does have kind of corrected 50% here, back down to the 337. But again, chopping. We need new news. We don't have a good enough, strong enough bull case to start pushing up. We don't have a strong enough bear case to start pushing down. People really just don't want to take the risk because they don't know. There's still too many what if scenarios. And so that's why I think we haven't seen a full born push to the upside, because we need more data, right? Like the earnings are crap. Like nobody was going to let the market push up those junky earnings. Not saying that it can't, right? By design, the market's supposed to be going up. So maybe there's a new catalyst. If it continues to chop, maybe we get some new media or administration says something else to try to get the market moving again. But right now, people are trying to reduce risk because a lot of people are sitting cash because they don't see, right. Like a lot of institutions won't play until they know what the next 6 months are going to be. And right now, the past year, you couldn't tell what was going to happen. Things kept changing all the time. I don't expect anything really different to happen from this year, but I do expect some sort of black swan or catalyst that's going to potentially sink us even more and provide new issues and problems on top of what we've already got, which I think is going to sink the market. And that's what I am looking for. So we'll see. If not, I'll play to the upside as well. I'm not discouraged to not play the upside. But right now, for me to play the upside, there's a natural pullback coming, healthy pullback, and then at that point I'll take position unless it's fueled by a black swan or some other event that's going to strike fear in the market and bring it down even further than what a natural pullback would be. Again, a natural pullback could be whatever, but it really natural pullback is it just essentially slowly grinds back down to where it was or half of that move. Where obviously if there's panic, it gets there a lot quicker and it continues to go. So, so we'll see. It'd be interesting nonetheless. But that's pretty much what I got. This video is pretty long, a lot going on, but we did get a lot of good data sets over the past week, kind of painting the picture of what's to come for 2023. I'm excited. It's good to see some movement, as long as we're not getting a lot of chop is kind of what I don't like. So hopefully we get some more news. Hopefully we get some more earnings to kind of guide us to which direction we want to go. The market kind of understands where it might potentially want to go, and see what happens. So if you made this far, go ahead and drop a like. And until next time, I'll see you guys later.